Welcome to the Week in Review, the show that brings you up to date on the week that was. Here are the top stories. Group of ministers approved direct fuel imports for airlines. GDP growth could fall below 7%. And Airtel's profit decline in the third quarter. First up, the government has thrown a lifeline to India's struggling aviation industry, and two carriers, Kingfisher and Air India, are expected to be the biggest beneficiaries. On Tuesday, a group of ministers has decided to allow airlines to import jet fuel directly. The move could help them cut fuel cost by up to 20%. Fuel usually accounts for about half of a carrier's operating cost. Kingfisher Airlines, which is both loss-making and ridden with debt, has long been pleading for direct imports. And in another key decision the same day, the group of ministers approved Air India's debt recast plan. That will entail converting 11,000 crores worth of short-term debt into long-term loans. And another 75,000 crores worth of debt will be converted into government-guaranteed bonds. Of course, the Union Cabinet still has to approve the decisions of Fuel Imports and Air India, but both are expected to pass through with little trouble. Moving to economy, government figures released on Tuesday confirm growth is expected to slow down to its lowest levels in 3 years. The latest advanced estimate says India's economy will grow at just 6.9% this fiscal. That would mean India will have grown at just 6.5% between October and March. And the gloom surrounding the economy only continued. Numbers released on Thursday showed India's industrial output has drastically slowed down in December. The index of industrial production increased just 1.8% during the month. Of course, the new figure completely contradicts the HSBC Purchasing Managers Index, which showed a strong gain in production in December. But Finance Minister Pranab Mukherjee admitted the numbers were disappointing and said he hoped for a pickup in a couple of months. But those aren't the only gloomy figures out this week. India's balance of trade is also getting worse. The government now expects the current account deficit to reach its worst level in 8 years. Its new estimate is 3.5% of GDP for the year ending March. Commerce Secretary Rahul Kullar said exports remain sluggish thanks to low demand from Europe and the US, both struggling with economic problems. According to new figures, merchandise exports grew 10.1% in January to $25.4 billion. But that was no match for imports, which went up to 20.3% to $40.1 billion. The yawning gap translates into a trade deficit of $14.7 billion. The government expects the trade deficit for the entire year to stand at about $160 billion. In the previous fiscal, it was just $104 billion. Moving to earnings, the country's biggest telecom firm Bharti Airtel has disappointed investors by reporting a fall in profits for an 8th straight quarter. Consolidated net profit tumbled 22% to 1,011 crores. That was on a 17% rise in revenues to 18,477. Airtel said some of the decline was caused by higher tax provisioning after some tax holidays came to an end. Meanwhile, the company's key measure of profitability, its average revenue per user, has also fallen. In India, Bharti Airtel reported a 6% drop to 187 rupees, and in Africa, it fell 3% to $7.1. Meanwhile, another giant firm has done even worse. India's largest steelmaker, Tata Steel, posted losses for the first time in more than 2 years. The company reported a loss of 687 crores in the third quarter compared to a profit of 949 crores in the same period the previous year. That was despite a 15% rise in net sales to 32,964 crores. The biggest contributor to Tata Steel's losses was a 742 crore write-down at its European unit Chorus. But steel and other metal companies are already suffering from a high input cost and low demand from Europe. Steel firms have also had to write down their inventories because market prices have fallen. And here are some stories in brief. Telecom firm Uninor's managing director Sigvi Brecki says exiting India is only an option if solutions are not found to its spectrum troubles. India's Supreme Court has cancelled 122 telecom licenses of 9 firms including Uninor. Auto industry body SIAM says car sales could decline in the year ending March. If sales do fall, it will be the first annual decline in a decade. On the bright side, there was a recovery last month, with sales going up by 7.2%. And finally, there's a shake-up in India's young e-commerce industry, with Flipkart acquiring online electronics retailer letsbuy.com. The deal is estimated to be worth between $25 and $30 million. And that's all we have for you. Thanks for watching.